The broadcast is now starting. All attendees are in listen-only mode.
Good afternoon, ladies and gentlemen. Welcome to Magic Bricks webinar, our endeavor to empower you with insights on the Indian real estate market performance and consumer sentiments on property prices in the next 6 months. The topic of today's session is Mumbai market shakes out of its slumber, Delhi awaits land pooling results. And our guest speaker today are E. Jayashree Kurup. She is the head content and research with Magic Bricks. And with us we have Dr. Venkatesh Panchpagesan. He is the Associate Professor of Finance and Coordinator, IIM, Bangalore. Jayashree is involved with a number of global research initiatives and specializes in analyzing research data to provide usable solutions to users. She also works with business in using industry dialogues with senior management in her domains of expertise to generate content solutions that keep audience and industry engaged. She has been a business journalist for over 2 decades with the Times of India, the Economic Times, and the Financial Express. She writes extensively on real estate and infrastructure, city management, information technology, HR, and management. Venki has almost 20 years of experience in academia and in global financial services industry. After finishing his PhD in finance from the University of Southern California, he has also worked with Goldman Sachs Asset Management in New York between 2005 and 2008, overseeing trading research for their quantitative hedge funds. He is certified in India as a chartered accountant and a cost accountant and holds a PGDM from IIM Calcutta. So without further delay, I introduce you all to our guest speaker. Over to you, Jayashree.
Thank you, Aradhana. Good afternoon, ladies and gentlemen. Welcome to the Magic Bricks webinar series. As you know, we have been conducting webinars about the Prop Index and the Housing Sentiment Index, which are quarterly reports. The Prop Index being a quarterly report of listed properties for sale and rent, and analyzing demand and supply across 11 cities across India. We do have extra cities which come in as guest cities in different issues. The Prop Index is now into its 4th year, and we have had a very good round of response from consumers like yourselves. This time, it is a very interesting stage in the development of Indian real estate. The sentiments are up. Consumers are searching actively for properties across the country. But the transactions on the ground are still limited. So what is happening in the market currently? The Prop Index and the Housing Sentiment Index actually give you tell you a story that's playing out on the ground. Till the new government came into place, the consumer was not willing to put in his money. For the last couple of years, the property markets have been slow, largely triggered by lack of policy, a lot of malpractices, maybe a capital crunch. There are many reasons why the property markets have been slow. However, having said that, developers have been constructing over the last 2 years across Indian cities, and today all Indian cities are in a state of surplus, which is amply clear when we look at what the Prop Index reveals. The Prop Index is showing that there is a lot of stock, new ready to move in stock or soon to be completed stock across Indian cities. So what is happening in the markets today? Girish? The Prop Index is a tool providing detailed information on price movements and supply and user demand for multi-story apartments and single floors listed across cities. The Prop Index also has a national Prop Index trend, a city Prop Index trend, listed price monitors across cities, a rent monitor, a yield meter which shows you the capital versus rental value yield, the top preferred localities by supply and demand across cities, demand and supply analytics which show you which localities are preferred by what types of consumers and what are the price brackets that are in demand. We also show you the locality price ranges. In a certain locality, you may have some properties retailing at, say, 4,500 rupees a square feet. Within the same locality, a premium property may be worth even 5,500 rupees a square feet. So how does this pan out? We also bring to you the realty news of that quarter so that it puts the policy issues in perspective. This time's prop index showed that markets have remained largely stable with index values either a -3 in some cases and a +4. The national property index remained at 0, which means that it was a very flat and stable market. Delhi is the city that has witnessed the maximum drop in index value of 3%. Now, there is a reason for this. We will come to it when I come to the city index. The Mumbai city index recorded the maximum increase of 4%, followed by Chennai at 3%, which means that the index value is a factor of price versus stock. These are the two parameters on which the index values go up. Availability went up across cities from 4 to 17%. As I said, there's a lot of stock happening across Indian cities. Hyderabad and Bangalore in the south, Pune in the west, Noida and Gurgaon in north all recorded the maximum rise in stock. Properties worth 30 to 50 lakh recorded the maximum demand at 28% and 50 to 70 lakh at 21% was a close second. Let's go to the Delhi NCR. This is an interesting time to analyze this city, this market. 55% of localities registered a drop in capital values. The rental market remained fairly stable with over 50% localities recording a marginal rise in values. Demand for 2 BHK units continued to outstrip supply. People want to stay in 2 BHK units because it is an expensive market. That's what they can afford. But the supply is still for 3 BHK units. The developer community is not listening to what the consumer is saying. And the consumer is not willing to buy whatever is presented to them as stock in the market. The Delhi real estate market offered the lowest return on investment. The areas where you saw the good return on investment, Chhatarpur, Govindpuri, Uttam Nagar, Lakshmi Nagar, Pandav Nagar, all less than premium areas where there have been some policy initiatives because of which these markets have started rising. The metro is connecting all these areas and therefore with low base price, the rental returns have risen. The Gurgaon city index dropped by 1%. We told you last time that the Gurgaon market was fairly flat and that continues. Almost equal number of localities recorded a rise or drop. So really there is not much change in the listed price monitor. Properties priced at 1 to 2 crore witnessed maximum demand of 37%. Gurgaon is a premium market. It caters to the professionals working in the large number of corporate offices in Gurgaon, and therefore it has a high income bracket, and therefore 1 to 2 crore is the one that witnessed the maximum demand. 3 BHK units were the most preferred category, unlike the national average, which is the 2 BHK unit. Over 50% localities witnessed a rise in rental values. Last quarter, there was a significant drop in rental values. This time, there is a rise in rental values. When people don't buy, the leasing markets become strong. In Noida, the city recorded an increase in the availability of properties for sale by over 10% in the last quarter. This is expected to continue. Noida has a huge amount of stock under construction and will continue to see lots of properties hitting the markets, ready to move in or soon to be ready properties. Over 50% demand was for 2 BHK units. Noida is led by the end consumer, people who want to buy and stay in that market, in that region. The demand led supply by 14%. 3 BHK and above witnessed an oversupply of 8 to 10%. The story is clear. 3 BHK units are the ones that developers are building. 2 BHK is what the consumer can afford. Close to 60% localities recorded a change in rental values from -6 to +5. determined by the proximity to the commercial districts. Sectors 50, 61, 62, 82 continue to be the preferred areas for rent. In Ghaziabad, over 75% localities recorded a rise in capital values, which led to the rise in the listed price monitor. An affordable market where end consumers are looking for properties, and that is reflected in the rising demand. Demand for properties worth 40 lakh and above exceeded supply across budget ranges. Except for the Crossings Republic, the city recorded rental returns of over 2.5%. Shakti Khand offered the maximum yield at 3.48%. Let's go to very quickly go to the western region. In Mumbai, 90% of localities witnessed rise in capital values, which pushed listed price of monitor up by 3% and the city index value by 4%. Nearly 60% localities registered a rise in rental values of 1 to 4%. Both capital and rental values are rising in Mumbai. In different parts of Mumbai, this is aggregated at the city level, but different parts of Mumbai are witnessing. Mumbai is finally coming out of the doldrums. The Mumbai consumer has started to bite. Navi Mumbai and Thane offered maximum properties in the budget of 50 to 100 lakh with over 40% market share and demand. Peripheral areas where properties are affordable, relatively affordable compared to city centers, that is where the action is happening. There's no significant change in rental returns, a very marginal rise. In Pune, the city index continued a steady rise of 1%, over 10% increase recorded in the active stock for sale. Lease markets witnessed a drop of 2 to 4%. People are buying in Pune, the lease markets are slowing down. Maximum demand noted for properties priced at 60 to 100 lakh, which is 60 lakh to 1 crore. The Western Growth Corridor is showing the maximum demand and supply, led primarily by the IT corridors. However, the manufacturing corridor, Chakan, Alandi, Talegaon, Tabade, Digi, Chakali, offers maximum options in the affordable ranges, new markets, and offering affordable properties. Ahmedabad, after a consistent drop in city index values in the last 3 quarters, Ahmedabad city index recorded a rise of 1%. Not much of a rise, but the fact is that the drop has been contained. When Professor Venkatesh talks about the sentiment index, you will realize that there is a significant rise in sentiment as well in Ahmedabad. Except for Chandkheda, Ghatlodia, Navrangpura and Ambawadi, all other localities posted a rise in capital values. 80% localities in the city registered a rise in rental values. Clearly an active market in Ahmedabad. 1 BHK saw demand of 10% as compared to 7% in the last quarter. Supply remained unchanged at 5%. Smaller units across the country are witnessing larger demand. Maximum demand was noted for 40 to 70 lakh category. The supply was at 27%. In the south, Bangalore, the city continued to remain steady with no dramatic change in capital or rental values in the last 3 months. A clear shift in buyer preference from plots to apartments continued to be witnessed in the city in the last 6 months. This has been steadily happening in Bangalore, and this is continuing. Majority of localities registered a drop of 1 to 8% in rental values. Overall, the rental markets remain subdued with a healthy rental return of about 2.2 to 5.1%. In Chennai, over 60% localities registered a rise in capital values, pushing up the city index as well as the listed price monitor by 3 and 4%. In rental market, over 65% localities recorded a rise between 1 to 10%. Chennai has been an active market with strong economic drivers. There are pockets which are driving the city's growth. Over 60% demand was for 2 BHK with supply at 54%. Over 5% increase in supply recorded in the last 3 months. Punamalli, High Road and Perambakam recorded the maximum rise. In Hyderabad, the city index dropped by 2%, whereas the listed price monitor remained unchanged. The Hyderabad buyer continues to wait and watch. Unlike capital values, rental values showed a positive trend. Over 60% localities recorded a rise between 0 to 10% with no significant change in stock. The city offered healthy gross rental returns in the range of 2.6 to 4.48%. Over 75% localities recorded over 3% annually. West Hyderabad continued to witness maximum supply, followed by North Hyderabad. Coimbatore is a city we have been tracking off and on. This time, the prop index does have Coimbatore. Saravanampatti, Ganapati, Trichy Road and RS Puram were the most active localities. Properties worth 40 to 70 lakh recorded maximum demand at 40%, followed by 35% demand for properties in the 20 to 40 lakh range. Almost 60% demand was recorded for the 2 BHK category, in line with the national demand, while supply fell short by about 16%. In East, Kolkata, in the last 6 months, Kolkata's real estate market recorded almost no change in the price monitor as well as the city index, 0 to 1%. The active supply has gone up by 7%. Rajarhat witnessed the maximum increase in stock, followed by Garia. Kolkata's market offered one of the highest rental returns across 12 cities tracked, 2.95 to 4.71%. Almost equal supply of 2 and 3 BHK categories. Demand exceeded supply in the 2 BHK category, as in all other Indian cities, and lagged supply by 11% in the 3 BHK category. Properties worth 20 to 40 lakh for the most preferred budget range, followed by the 40 to 60 lakh at 26%. Now, why would you need an index of this sort? It helps the industry, developers can understand buyer preferences of property types, size, configuration, budgets, localities. You can make out from the prop index where the supply versus demand gaps are, and developers who want to effect quick sales, regular sales, should be able to read consumer preferences here. Government offices and ministries of urban development would be able to assess demand and supply gaps and use policy. Today, the Indian consumer sentiment is hooked on to policy. The minute there are policy initiatives, you will see a change in markets, either locally or at the national level. Construction organizations, it helps them to forecast demand and supply situations at the region and locality levels. For consumers, do not take decisions without doing your own research. This entire initiative was started to enable consumers to have a lot of data to make informed property decisions. Understand your localities, understand your cities, understand the real estate trends. If there are more people looking for properties in a region and there is less property, the chances are that you will not be able to negotiate. It helps you to understand what the benchmarks at the locality levels are, the price benchmarks. How to improve your financial status. If you're investing, entering the market as an investor, understand what has been the returns trend. The prop index is computed on the basis of listings of apartments and capital and rental values on magicbricks.com. Individual properties are aggregated into localities, they're weighted to cities and then to the national index. The weightage is based on supply of properties within the locality and the city. The Magic Bricks has over 700,000 active properties posted by more than 140,000 active users in 300 cities and 10,000 localities. There are 12 cities, 620, over 620 localities. Delhi, Mumbai, Chennai, Kolkata, Bangalore are the main metros. Pune, Hyderabad, Ahmedabad, Coimbatore, Noida, Gurgaon and Ghaziabad are the tier 1 cities. Capital and rental values are tracked quarterly. Yield on investment helps you to understand how your investment is doing. There is extensive use of demand or user demand analytics, demand versus supply statistics. The top 10 preferred localities city-wise is showcased. There is a section called Home in Your Budget, which is extremely well used in Prop Index, where consumers who start with a budget can quickly check what are the localities where you would get stock within your budget. Real estate news snippets allow you to understand what has been the trend in the city. This time we have a special. The Times property editors from every region have given their perspective on the real estate market. Thank you so much. Over to you, Aradhana.
Thank you, Jayashree, for the wonderful insights. I pass on the rights to Venkatesh. Venkatesh, please accept the notification.
Okay, yes. Right. So can you guys see my screen?
Yes. Please continue.
Fantastic. Okay. Thanks a lot, Aradhana, and thank you very much, Jayashree, for setting the context for this quarter's both the price index as well as the sentiment index. So obviously we're going to be talking about the sentiment index, which is largely what home buyers are thinking about in terms of prices for the coming 6 months. So just to give you a brief background about us, I mean, we are part of Indian Institute of Management, Bangalore. As Aradhana said, I am Venkatesh Panchabhakesan. I am heading this real estate research initiative, which was set up a couple of years back to bring about scientific research and data in the Indian real estate market. And what we did was, our main focus is largely to partner with governments, partner with entities like Magic Bricks to allow both the collection of data in a good way as well as being able to bring in an objective voice in the discussion about real estate issues. And our one of our first effort was to bring about the sentiment index, which was missing because the consumers, as you know, were largely not being fully represented in the discussion about what's happening in the real estate sector. And I think both Magic Bricks through their prop index and us through the sentiment index largely were trying to get the consumer back on the table by providing their inputs into the process. So what we have done is we go out, collect sentiment among home buyers, and a lot of these home buyers come from the Magic Bricks website, people who have already in the market for a house and they are looking to buy in the next 6 to 8 months. And then we we ask them a series of questions and we capture their views about prices over the next 6 months. So this is more a futuristic index. So combined with the prop index that Jayashree just talked about, we should be able to get a color of what's going on. And I'm actually happy to say that the housing sentiment index has been a good leading indicator of what's happening in the pricing index. So in other words, whatever people think about housing prices 6 months from now, when we actually go to 6 months later, the house prices reflect what the sentiment was 6 months back. So I think to that extent, the sentiment index is capturing really what is the underlying issues in the marketplace. So we have a standard diffusion index methodology, and so I don't want to get into the technical details, but this is a sort of a methodology that is being adopted across the world on trying to capture sentiments. What it does is it gives you a range of values from 0 to 200. With the 100 being the implication that buyers expect prices to be flat. So if you find a value of 0, that means every buyer in the market expects prices to fall. And similarly, if you see a value of 200, every buyer in the market is expecting prices to rise. So 100 is a benchmark to look at when you look at this index. There are two other things to focus on. One is the absolute level of the index itself. So as you can see, any number that you see above 100 implies that in general there are more buyers expecting prices to rise than otherwise. That's what the absolute level of the index captures. And the changes in the index quarter to quarter captures whether that sentiment is increasing or decreasing over time. Both of these metrics are very important to focus on. And so we in the course of this discussion. We also, following Magic Bricks effort, we also do a complete coverage of these 10 major cities and also the micro markets within those cities to give you a sense of what buyers are looking at. One of the things that we actually are very we focus a lot on is the buyer demographics. So in the sense, who are the buyers who are interested in coming into this market? Are these buyers at what income levels are they? Do they have? What sort of employment do they have? Because all of these things have a bearing on both the sentiment and also in the transactions that later on gets captured in the prop index. I'm actually joined today by Uma Sitaraman. She's our lead researcher in our initiative. She is responsible for putting together this housing sentiment index quarter to quarter, and I'm just going to hand the mic over to her so that she can walk you through the details of this quarter's housing sentiment index.
Thank you, Professor. Hi, everyone. Just to give you a brief overview and going by citywide sentiments, This is the first quarter when sentiments were positive for all cities, meaning they were at a value of above 100 for all cities. Although this is something very good, again, we'll have to keep this in perspective in the sense that if you see those red arrows, you see that 8 out of 10 cities have actually dropped. The sentiments have dropped in 8 out of 10 cities, with only Pune and Ahmedabad recording increase in sentiment. Now the history behind this is that the previous quarter when the survey was done, it was just after elections, and there was this general euphoria with the majority government coming into place. And this quarter there is definitely going to be some settlement in sentiment, with people kind of putting things in perspective and hoping again that the new government is going to perform. But again, there's a lot of positives. So if you look at the positives in the economy, keeping in mind housing as a sector, our GDP rate grew to 5.7%, and that's the highest in 2.5 years. And auto sales have gone up. There's also the new government trying to push REITs and investment trusts, a lot of focus on infrastructure, which is going to bode very well for the housing sector in general. So there definitely is going to be a positive. We see the positive all across. It's just that this settlement was bound to happen at some point or the other. Also, there is quite a bit of volatility in the regional market. So if you take Hyderabad, for example, because of the Telangana issue, in the last 4 quarters, Hyderabad has been swinging wildly from negative to positive sentiment back and forth, which is again bound to happen due to the political uncertainty. And Ahmedabad, like Jayashree already mentioned, saw a huge increase, a 30% increase in sentiment. And what we can attribute it to maybe is due to the virtue of providing the country's current Prime Minister, Mr. Modi, coming into place. In terms of the HSI numbers itself, the aggregate HSI, which is the HSI taking into consideration all the 10 cities, came in at 114, which was a marginal drop from the last time. We also conduct a parallel seller survey, which captures sentiments of sellers. So what do sellers think sentiments are going to be in the next 3 to 6 months? And that has steadily remained positive and is still highly positive at 159. So the only positives this time, that is Pune and Ahmedabad, those are the only 2 cities that showed an increase, with Pune coming in at a 5% increase from the previous quarter. Bangalore's HSI dropped, and this is the first drop actually in a year. Bangalore's sentiment has been increasing steadily over the past 4 quarters. It dropped by 13%. Again, this is something that's understandable because when sentiments are pretty heated up and lots of positives. Again, this doesn't mean necessarily that your real estate itself is dropping. It just means that people are kind of putting things into perspective. And one other thing to keep in mind all across is when this survey was taken, we were also getting into the festive season. And in general, what happens during festive seasons, that's when maximum buying happens, because a lot of developers come in with freebies, and they kind of flash prices to provide the incentive for people to buy. So you can also see that the waiting period has increased marginally due to this, and also because people are waiting to buy during the September to November time frame. Gurgaon and Noida again witnessed marginal decreases, 11%, 10% respectively, and all of the other cities sentiments dropped very marginally, somewhere between 3 and 1%. So what we do with this data is to gather some insights, analytical insights on what is it that people are trying to say when they are taking the survey. What is it that we gather from like the information they share with us. So I've just put in some bullet points here, basic points here, where if you look at the average wait time, it dipped last quarter to somewhere slightly lesser than 9 months, which actually means to say that people are on the average willing to wait 9 months to make their purchasing decision. Now this is again climbed back up slightly to 9.1 months this quarter, with 44% of buyers preferring to buy within the next 6 months. And this 44% has been pretty steady over the last 1 year. About 53% of prospective buyers live in rented accommodation, which is again a good sign for the housing market, because most of these people would want to own something of their own soon. 83% earn less than 20 lakhs per year, and 55% earn less than 10 lakhs annually. Now, this is again something that needs to be looked at, because a lot of buyers are looking for properties in the 20 to 40 lakh range, and in most of the cities, the metro cities, there's hardly any, very few properties available in this range. And 19%, which literally means that 1 in 5 are looking for property within below 20 lakhs. In terms of property preferences, as Jayashree has mentioned, there is clearly a preference for apartments across all regions. 67% of prospective buyers want apartments, and the HSI comes in at 115, so they are pretty bullish about the markets. There's 16% who prefer villas, and only 13% prefer owning land or plots. But if you look at, overall, if you look at the last 1 year, the positive sentiment for land has always been higher, in the sense that people who want to buy lands are always a lot more bullish than people who are looking to buy apartments or villas. Whereas villas exhibit most volatility in sentiments, again understandable, because they are generally highly priced. And when the economy tends to tank or show signs of tanking, you will see people withdrawing from buying high-level property. Mumbai, with 92% of residents preferring flats, comes in at the highest in terms of flat ownership or wanting to buy flats. 24% of residents in Bangalore want to buy land, and this is the maximum in terms of cities for land buyers. 39% of residents in Chennai want to buy villas, and the HSIs for these groups are provided the bracket. There's a lot more analytics that we work on apart from this, in terms of gathering the age of buyers. What is the age? What is the are they buying to invest in property as an investment, or are they going to move into this property? And a lot of other interesting analytics which you can download and read. Our report is available at the IIMB website for you all to download. Now, the key points to note from this survey is that there is a huge percentage of population that's looking for property in the 20 to 40 lakh range. And this really means that we all need to focus on affordable housing, government specifically, and also developers need to focus on affordable housing, so that people, so that you can, the supply demand should be met. So right now, what's happening is a lot of properties that are vacant but not affordable to people who are looking to buy. So this gap needs to be addressed, and there needs to be a lot more push in terms of affordable housing. The government's introduction of REITs, focus on infrastructure, is the right step. But again, if we can have some effective policies backing that, maybe that will channelize the developers to motivate them towards buying, towards constructing affordable housing. Again, the huge level of renters, over 60%, bodes very well for the housing market. So we see that the housing market seems to be all geared up to move upwards. Sellers continuously continue to remain bullish, and this time their HSI was at 159. So overall, if you look at the housing markets, I think we are in an uptrend, and most cities are bullish. They are looking to better policies, and in terms of inflation levels climbing down slowly, everything seems to be boding well for the housing markets, and hopefully interest rates will at some point soon be addressed, and if there is a rate cut in interest rate, that will again be another positive for the housing markets. So I think there is quite a bit of positive, and the next survey should indicate quite a bit, factoring in the festive season sales. So we should, I think, look to some more positive in the next survey. Thank you all. Over to you, Aradhana.
Thanks for this insightful presentation, Uma. Let's quickly take up the questions now. I would request both our speakers to read out the questions and their answers, so that all our users may listen to your insights.
Thanks, Aradhana. Professor Venkatesh, shall I start?
Yes, definitely. Thanks, Shashi.
Okay. Let's take the first question that has come. We have Gurjar Dolaram, who said, please tell us about the future affordable housing hubs in or around Mumbai. Now, let me take it from the prop index perspective. If you look at the Mumbai edition of the prop index, we have something known as home in your budget. So I'm assuming that you're talking about properties in the up to 20 lakh range. So we have Karjat, Neral, Kalyani, Smurbad, Titwala and Shahpur, where we have properties listed on our website. So these are properties, these are active property markets where there is a lot of stock. If you're looking in the 20 to 50 lakh range, which is what the budget has determined as affordable housing, where there is tax incentive given on housing finances at a lower rate. Here you have Mira Road, Kamote, Ulve, Virar, Khargar, Vasai and Panvel. These are also active localities on the website. Let me also put the whole question in perspective. Today you are seeing a lot of infrastructure. You can see that in Mumbai and around Mumbai, infrastructure is what is actually impacting the property values. There are a lot of infrastructure plans in the works. There are many that have taken off. You do know that there are there is a JNPT to Navi Mumbai Trans Harbour link that is proposed. That will have a significant impact, and those are areas that will open up new areas for investment. You also have the Mumbai to Ahmedabad, the bullet train, which is already opening up new areas for development. And if you look at places like Vapi, you can see Mumbai city developers moving in that direction and buyers also going in that direction because property prices are very low. So actually, if you look at it, you should have your ear to the ground. You must do a lot of research before you will be able to find the right properties. But the properties are there, and look for places that are going to be connected with transport infrastructure. Venkatesh, anything to add?
Yeah, just a point. I mean, this is not specific to Mumbai itself, but it is in general a problem across the country. For example, in Mumbai, we see about 25 to 30% of buyers are in that range of what we call as affordable housing demand range. So I think the problem is more of how do you get houses built at a cost which is reasonable. And given the land prices in Mumbai, it is getting rarer and rarer. And the only possibility is going away and away from the main centers. And I think the current government is recognizing this, because I can tell you that based on some very high-level discussions about jump-starting the affordable housing package. So the current ministry is very keen to do that. So we have had some very high-level discussions on that with the government of Karnataka. But I think it's more driven by the center, and I hope that some of these things get translated enough so that buyers can move out of rental accommodation, or people who live with their parents and so on, they can get their own houses, and it doesn't completely burn their savings. So it is more like a general discussion, a general thought that look, affordable housing is a problem. And that needs to be tackled at a much bigger level driving from the center down to the states. Over to you, Jayashree.
Thanks, Venkatesh. Let's go to the next question. We've got Robin Tomar, who has said there are various land pooling policy brochures, hoardings, and marketing is taking place in the market. Are these authentic? Should one actually invest? Now, this is a very important question, and considering that Delhi is actually, there is intense excitement in the Delhi market over land pooling, I think it is important that we address this issue. What is land pooling? Land pooling is when the authorities allow small holdings owners to bank their small holdings with the government, with the authorities, which aggregates the land, returns, gives away a portion back to the owner after taking away some portions for infrastructure development such as roads and other facilities. So if you are in a low-grade locality or a locality that needs redevelopment, land pooling actually allows you to modernize your locality, get better value out of your land. You lose a small portion of your land to the development, but that development is, you don't have to pay for that. That is what the government is doing, and you will get fresh developed land. In Delhi, because after the land pooling was announced, there has been intense speculation, and a lot of large land owners or land aggregators have got into the Najafgarh area, and this area a lot of land has been aggregated. The policies have not played out yet. There is a lot of, while the roads and so on have been demarcated, it is very important that you understand the nitty-gritty before you buy, or you can be taken for a ride. So Robin, I would say as a small investor, unless you have a very professional advisor with you, do be careful, allow the policy to play out some more before you start investing in the land pooled areas. Venkatesh?
I cannot agree with you more, Jayashree. I think these are good in principle, but in practice they could be a lot of different things that can go wrong. So as a consumer, they should be extremely aware, especially after having seen many scams in the financial markets, because these are all cases where information is not easily available for the consumer. So it is very well possible that people get taken in by a few pitches, few people pitching it in a very attractive way. So please do your homework. If you don't have the full information, don't do it.
Thank you. Let's go to the next question. We've got Ruba Suhail, who says, do you see a change in buyer's profile or a difference in investments end use when premium localities of Delhi record a price fall? Does lower prices actually make a difference when it comes to an area like Defence Colony, Saket or Vasant Kunj? Now, Suhail, I think I'll address this question in, let's talk about what happens. Why do prices fall? Prices fall in Delhi, which was largely an investor-led market. People used to invest in properties when they were launched and then later sell, and the end user used to be the third or fourth buyer in the Delhi market. Today what's happened is that a lot of the investors have moved to the land pooling areas, and they have been investing in land in those areas. Therefore, the city prices have recorded a fall. Also, prices were very high. The Delhi markets have not been a very clean market, and the consumer clearly has been wary of investing in this market. The end user has been scouting around, and you would find that whatever transactions have taken place in this area has been by end users who are actually trying to upgrade their lifestyles. If you stay in a smaller unit or in a less premium area, during a period of falling prices in areas like Saket, Defence Colony, Basant Vihar and so on, which are areas that have aspirational value, many end users try to enter those markets during the down cycle because that makes the property affordable to them. It is also a time when you can negotiate very hard for good values. Once you negotiate, and a lot of people are doing this, they start purchasing a property, they take a loan, and when the markets have started rising, they sell off the property that they lived in, the less premium property, and put down your loan. So, which really means that you're leveraging the lower falling values and you're purchasing property. Now, suppose you can't afford to put in that money without selling. Some have even taken the call that let me sell and buy now. When I sell, I'm not getting my best values, but it is a good time to go into localities where I would like to stay, and those values will go out of my range. A lot of people are doing this, and this is when the end users benefit. Venkatesh?
I don't have anything major to add here, except that I was just talking to Umay here about not having referred to the increase in circle rates. You know, I think there's a twin effect going on in places like Delhi where the prices are falling, but at the same time the circle rates have gone up, and that could actually put some more effect, some more pressure on prices. So if buyers are smart, they may just wait and wait for prices to settle even more. And as you said, there's also possibility that people can sell quickly and then reinvest the proceeds at the lower price in a more preferred locality, which is also possible. But my guess is that in Delhi, I'm expecting prices to fall even more, especially after the increase in circle rates.
Yeah, sure. Venkatesh, that makes a lot of sense. I would urge our invitees to actually look at content.magicbricks.com. Keep watching the space. There is a very interesting analysis of circle rates and how unscientific practices of raising circle rates are going to impact the property market that Professor Venkatesh has done. It will shortly be uploaded on our content site. Let me take the next query. C. Suresh has posted 2 queries. He says, during my recent search in Bangalore, I found that many small and medium developers are not ready to provide completion certificate and occupancy certificate for their apartments, whereas they are a legal must. Please clarify whether PropIndex can take legal compliance of developers who into account while calculating the index. In his view, there needs to be a separate index to monitor legal compliance till giving of CC and OC to consumers. Suresh, I couldn't agree with you more. I think this is a serious issue and it needs to be addressed. Today, we do not have the means of addressing that. However, what we can do is, if you have a specific problem, do come to openhouse.magicbricks.com. Post your query there, and we have a solicitor on the site, S. Jalan & Co., which is a very respected legal firm, which has been answering queries of our users. We would refer your query to our the solicitors and get you a specific answer to this. But I really think that going forward, the legal compliance is very, very important. However, I wouldn't blame only the developers. The authorities which have to give the occupancy certificate and the completion certificate have not been upfront. We have been pushing with a lot of other people in the industry that when the new regulatory act comes in, it should also bring within its purview the authorities that have to give approvals. Many times the approvals process themselves are late, are delayed, and the consumer ends up paying a whopping amount because the approvals take between 18 to 24 months. What you said, after you've invested, even the occupancy certificates and completion certificates are not foolproof. They don't have a system, and many cities have a problem. I can understand the pain that people like Suresh face when this kind of problem arises, and we do sympathize with you. We would try our level best to get our legal team to assist you. Venkatesh?
Yeah, so actually, I'm glad that you raised it, because we are also doing something at our end of trying to make the information available in terms of the approval process, because one of the biggest impediments here is that a lot of consumers who are looking to buy houses don't have all the information. For example, whether the development is on an encroached property, or whether the builder has gotten all the approvals in place before they start construction, whether the FSI has been breached, and so on. So these are many things that are happening in the marketplace, which obviously the real estate regulatory bill, if it gets fully implemented, should address them directly. But given that it's not happening until now, you still have these developers selling apartments or houses which are clearly in violation of these principles. I want to add one thing to what Jayashree said. I think there's an amount of guilt on the developers, there's an amount of guilt on the government agencies, but there's also some amount of guilt on the consumers, because a lot of them, in their hurry to buy a house, and sometimes these developers are very, very smart in offering a little bit of discount, which attracts a whole lot of consumers who are willing to not do the due diligence checks, and they end up buying these properties and then later on paying the cost. And I think be aware of the temptation. That's what I would say.
Thanks, Venkatesh. Thank you. There is a query from Shashi Singh, who says, metro station is proposed in sector 78 Noida. As the property values are already high, do you see a further rise in values? Shashi, I'll go with the past experience. We have noticed no matter what the value of the property in that area, once the metro actually takes off, because of the convenience and the opening up of that area, we do notice a 15 to 25% rise in property values after the metro is completed. But remember, when a metro is announced, there is a 5 years of pain during the construction of the metro, and during that time we really see a lot of drop in property values. Either there is a drop, or you will find that it doesn't rise much in that period, in the interim while it is being constructed. So to have that gain at the end, there will be a pain for about 4 or 5 years while the metro is being constructed. Therefore, you have to rationalize the benefits and see whether you want to buy in that area. However, Sector 78 is a premium in-demand area, and we have been saying all along that there is stock, there is demand, and it is a good sector to buy in. Venkatesh?
Actually, the consumers, especially who are buying houses to live, they will definitely face the pain during the construction process. But if you're looking to buy it as an investment, and that may not be a bad idea, because if you can look at riding the price increases post the metro construction, then I think it should be not a bad idea.
I want to tell our users that we're getting a large number of queries on land pooling, and we will be addressing these queries. We are just addressing some of the queries that have come from other cities, and we'll come back to Delhi's land pooling again. There is Vishwanath Singh who says, after the separation of Andhra Pradesh, is it good time to buy in Hyderabad, and where? In a market that is giving you prices like nowhere else in the country, I think Hyderabad is a good market to put your money in. And this is because we feel that in Hyderabad there are many good indicators. Look at what is happening in Hyderabad. The properties, there is a lot of stock in the market. The developers, because they want to move the consumers back, have given you good quality properties. You can buy very luxurious properties at throwaway rates. This will not last forever. Right now there is political uncertainty. But whatever the uncertainty, look at what is happening in the Hyderabad market. All grade A premium commercial space has been taken up. Some of the large users, domestic and international, like Wipro, like Infosys, like IBM, Google, have all invested in expansion of space because they see their facilities increasing. If their facilities are going to be bigger, that means more jobs, that means more people, and more people means more requirement for housing. So while this process may take a little time, the cost arbitrage that you get today is not going to last forever. It could last for maybe another couple of quarters. So if you are serious about the Hyderabad market, do look around in this market. Look for places where there is access to commercial areas. Check out where the commercial transactions are taking place, and if you buy anywhere along the IT corridor, you will find that there will be a good demand for rental, a good rental demand as well. If you buy into properties that are ready to move in, you must buy where there is current rental demand. If you're buying in the early cycles of the property, look for where there will be future demand. But both exist in the Hyderabad market, and I think this is a good time to start exploring this market. Venkatesh?
I'm just going by what we sentiments. The Hyderabad is a market which had been very volatile, as Uma had mentioned earlier. So clearly, people were not sure which way it was going to go, and now things have settled down. I think there is only a little bit of upside because the market prices have gone down. So I would be a little bit more comfortable because the government still has to show some output, but that will happen over time. But if you're looking to buy, this may not be a bad time.
Thanks, Venkatesh. Let's go to Dhananjay Singh, who says, will property prices go down after the implication of the land pooling policy, as it will unlock huge land parcels for development? Dhananjay, the only solution to high prices is to increase stock. And land pooling to that extent is a good thing for the Delhi market because it has opened up a lot of area for development. Having said which, Delhi has not actually utilized all its land that was available for development. The Delhi Development Authority has land parcels in Narela, in Bhavana, Rohini is not fully built up. There is Dwarka where large land tracts are available. Just getting the land is not enough. The DDA had also to implement the construction and sale of this property. So land pooling is good if people don't start holding on to that land and waiting for values to go up, and so that they can sell at peak rates. Land pooling is good if policy issues can be taken soon, and if that land is unlocked for development, which is the crying need of the city. Delhi is a city where redevelopment is what is bringing in fresh stock into the market. Land pooling is planned redevelopment, and to that extent it is good, and it has the potential to bring down values. It only depends on how well policies are drafted and implemented. Venkatesh?
Nothing much to add here, Rajesh. I think land pooling is, as you mentioned earlier, it's a big topic. I think we should probably dedicate a full session for that.
Absolutely. And in fact, I want to tell our users that while we will be doing a special session on land pooling, we will call experts in, and we will have a special webinar on land pooling. I would also like to tell our users that Magic Bricks, content.magicbricks.com, where our large content team is constantly giving you advice on what is happening in the market. We will be addressing land pooling very soon as a focus theme for a week, and we would be sending out a mailer to all our participants here so that you would be able to come and participate in discussions. We'll have special webinars, we'll have a Guru Talk where we will have experts coming in to talk about land pooling, and we will also be opening out a session on our open house section where you can discuss land pooling. However, we will of course answer all the questions that you're posting on land pooling. Let's quickly go on to the next question. I've got Rajat Narang, and Rajat, I'm addressing your question here. This is, please guide me about the good housing project areas in Mumbai. Rajat, there's no good and bad area. If you're an end user, you have to look at your convenience. If you, for instance, if you're looking at Navi Mumbai, maybe because it fits your budget, please understand that there is an expressway that has come which connects it to South Mumbai. That opens up Navi Mumbai for a lot of people, because if you're working in the South Mumbai, Nariman Point area, the distances or the travel time has been shortened significantly if you have been driving from Navi Mumbai. Therefore, a lot of people have been considering Navi Mumbai. It also matches your budgets. It fits into, there are all kinds of properties that fits into your budget. Also look at places like, for some people, living in the Thane area makes a lot of sense because it is easy to access. Remember, when you look for a property, you have to look at places that afford you the convenience of being able to do the daily commute, which should be well connected, and which should also have social infrastructure like schools, hospitals, retail, entertainment centers, so that your life is more complete. No longer is the person looking at a house, the person is looking at a lifestyle. Any buyer today is looking at a lifestyle. You want to be able to walk comfortably, to meet friends, to entertain, to access healthcare facilities. All these are important. So nobody can tell you where to buy. What you can do is, if you detail out your requirements, we can probably tell you what matches the, what are the properties on Magic Bricks that match your requirements. Right? You have to think out your requirements yourself. Venkatesh?
Nothing much to add, Jayashree, in this.
Okay. We are very close to the end of our discussion, but we will take a couple more questions very quickly. There is Purbash Nayak who said, how to avoid frauds related to land pooling policy. Purbash, I would say, till the policy plays out, don't invest in land pooling areas unless you have a very, very good advisor with you. There is Some information on Delhi land pooling policy. DDA has thrown in a new point. Only those areas with more than 60% land submission will be covered under the LPP. Also, no remarks made about acquisition of unpooled land. Do wait for the policy to play out. It is way too early for small users like us to enter. As there are many reports that says that there are unsold inventories in areas such as Vasai, Virar and Kalyan, I'm looking to buy a 3 BHK unit in these areas. Do you think I can negotiate when there is a huge supply? How much can be the negotiation? Actually, it's not one person or the one place or the other. When there is more stock, of course you can negotiate. But do understand that you have to be very careful about what you negotiate. Normally about 8-10% in a weak market is possible. That is not, there is no norm saying how much can you negotiate, but this is something that you would like to do. Venkatesh, you want to add something about property negotiation?
Yeah, actually, I mean, I'm just going by the experience in Bangalore that we have seen. I think negotiation you should definitely do in these oversupplied markets. The only thing that what will typically happen is that the developer will give you a suite of options for which he will ask you, or he or she will ask you to take. I think what I would recommend this particular caller is to make sure that you don't take what they give you, but rather you ask them what you want. I think that would, because that is something that we have seen in Bangalore quite a bit, where the developer will tell you, this is what I'm going to give you as a discount, or this is an amenity that I'm going to throw free for you. And some of those things, it may not be relevant to you as a buyer, you know. So that's why I think you should ask for what you want and hopefully push for the developer, given that in an oversupplied market, he might just budge.
Yeah, exactly. There is a query that has come from Vipin Kumar, who has decided to buy a property solely by a TV advertisement. The advertisement says that a particular plot is close to Bhiwadi and there would be a good social infrastructure in times to come. Is it a good idea? Vipin, you know as well as I do that this is not a good idea. But the reason why I'm taking your query is because there are many people who get taken in by television advertisements. I can sell you a big dream with there being not even a blade of grass on the ground, and a lot of people have suffered for this. So I would say that anybody who's buying a property, do make the effort to do a lot of research, join online discussions. There are many people who are discussing the new localities and places like that, and listen to the internet noise. It tells you a lot. Come to Magic Bricks, we have a complete advice section where we tell you about localities. We allow you to rate the localities. Others are rating it for you. There are experts who are answering your queries. Do your research, because after all, it is your money. And if you put your money in randomly on the basis of a television advertisement, that cannot be a good idea. Venkatesh?
Yeah, please don't do it. So I think, I mean, you cannot say it more. Please do not take televisions, do not take newspaper advertisements. Go do your own checks. Ask reliable sources. So that, I mean, please, as Jayashree said, it's your money, and don't repent later for doing some foolish things.
Yeah. Is Andheri East a good investment option at the moment? Asks Rajat Narang. Andheri East has opened up as an investment destination only because of the new metro line, which makes it gives it good access to the other the eastern and western corridors. It's actually a market that has taken a rise in the last couple of quarters. Check out the options and look around. I think if it is convenient for you, do go ahead and look for it. Actually, again, I would repeat, nobody can tell you what is a good investment option. Look for, there are some rules of the thumb. Look for a property that will not strain your resources. Look for a property where if you're in planning it as an investment and you're going to wait for leverage value, there should be some kind of rental return so that it doesn't turn into an outflow for you. The monthly maintenance, the taxation is taken care of by the rental values, and it also gives you a small amount coming into your bank account. This is important when you look at property investments. Venkatesh, anything to add?
Nothing much.
Okay. At present, there are a number of small developers who are offering apartments in Delhi at a price of rupees 3,000 to 4,000 under the land pooling policy. Are these safe, Maurya, Ranjita? No, they are not safe. It is too early. Do not invest in anyone who's selling you undervalued properties. You don't know when it will come to you, and you will end up losing money. Anything to add, Venkatesh?
No, I think, I mean, this land pooling thing is it's a whole lot of things. Please let
Yes.
it settle down before you make the move.
Yes. If one buys a property in Gurgaon, will its appreciation be hit by land pooling policy in Delhi? Ask Vivek Goel. Vivek, this is a highly speculative question. How can I tell you what will happen in the Gurgaon market? Today, people are buying in Gurgaon. All markets are slow. People are buying in Gurgaon because the Delhi land pooling is yet to play out. The minute that plays out, will it have an impact on Gurgaon? Not necessarily. Gurgaon and Delhi need not be linked to each other because they're two separate markets with independent drivers. Having said which, they're both in the NCR. The proximity to each other may have impacted, but I don't think that is the criterion on which you should base your investment. If you are buying, buy something that has future potential. Let's go to the last question today. In Mumbai, reaching an office is a big deal. Do you think townships coming up in Mumbai, self-sufficient in terms of commercial and retail setups within the township, will change the face of Mumbai? Well, I think this is something that you should. The question is in the answer. The answer is in the question. If the township is self-sufficient, if you can walk to work, if you can find everything within your locality, of course, those will be the answer. But having said which, you don't necessarily have to live. If you live in a township, you don't necessarily work in the township. You may have to travel outside, and therefore look at the convenience of reaching wherever you have to reach. Thank you so much for everybody for joining us. Venkatesh, any closing remarks from you?
No, actually, I'm glad that a lot of people are asking these questions, and I think I hope we are able to address some of their concerns, because I think that's probably what is bothering most of the consumers in the market today.
Absolutely. I would thank everybody who has joined us in this webinar. We do have 3 more webinars lined up on the Prop Index and the HSI, where we will be answering questions related to specific markets, as in the northern markets, the southern markets, and western markets, and so on. So do keep joining us. Do keep the queries coming in. And in case you don't have the time to join in, you can always click and read what happened during the webinar. You can listen in, download it, keep it, because these are things that we cherish, because they come from end users, and we're trying our level best to address your concerns. Thank you so much for joining us.
Thank you so much also from our side.
And I'm really thankful to our guest speakers today for conducting this informative webinar with us. It was indeed a great session. I would also like to thank all our participants for their support in making this webinar a success. Thank you all for joining us today. Thank you, Jayashree. Thank you, Venkatesh, for taking the time out and having us. I hope you both have a great evening ahead. Bye-bye.
Thanks,
Thank
Aradhana.
you. Bye-bye.
Bye.